Good morning, everyone. Welcome back to the session on audit. So today we are starting with another very interesting topic that is about NBFCs, non-banking financial companies. We are going to discuss certain perspectives around the NBFCs in terms of their legal provisions. Then we are also going to talk about the auditing aspects, which is specific to the NBFCs. During the course of our discussion, we'll also understand that even though NBFCs happen to be sort of different entities, wherein the rules and regulations for this category of entities is slightly different as compared to what we see in case of other sort of companies, but still the auditing objectives or the auditing procedures for the purposes of audit of financial statements of NBFCs would not change significantly. And this is something which we are going to discuss over the period. Like we understand, for the purposes of our audit, auditor is required to issue an audit opinion. And the same is the case over here also. Means similar to any other entity, for the NBFC, auditor is required to issue an opinion whether the financial statements of NBFC give a true and fair view or not. So that means in a similar manner, auditor will approach the audit of NBFC also. And I'm just using a lot of similarities because I understand there are a lot of auditing aspects you would have covered already in respect of various topics that you would have covered, and at intermediate level also we have understood a lot of auditing aspects here. So we are going to just use that understanding of ours and just leverage on that part while we'll discuss about the NBFCs. Talking about NBFC, before we get on to the auditing requirements in detail, NBFC is a specified category of companies. And these are those categories of companies, or you can say these are those entities which are highly regulated. So let's talk about any other company, means a company which is not an NBFC. Now, this company will be subject to certain rules and regulations. For example, Companies Act will be applicable to this company. Then we can say Income Tax Act will be applicable to this company. Then there are certain regulations which are driven by PF or various other regulations that we understand in the normal course of any company. Now, when it comes to NBFC, in case of an NBFC, all those laws and regulations which we see in case of any non-NBFC are applicable to NBFC also. Why? Because non-banking financial company is a company to start with. So it's a company, first of all. So that's why all of those rules and regulations are applicable to this set of companies also. Over and above that, there are various other laws and regulations which will additionally become applicable to NBFCs. And that's why, what do we understand? That these set of companies become highly regulated. Now, for us to understand why these set of companies are highly regulated, what is so peculiar in respect of NBFCs, and why they are subject to such a stringent requirement of rules and regulations, let's get on to understand about NBFC first of all, and then we'll understand as to why all of these stringent regulations are there in case of NBFCs. Now, what is an NBFC? We can say it's a financial institution, which is a company, and which has the objective and which has the business of giving and receiving deposits, of giving and receiving loans. Yeah. And this is something which we also called as the principal business of NBFC. Now, please read this para first of all to start with. In order to identify a particular company as NBFC, we need to consider a criteria first of all. This criteria will be based on the last audited balance sheet of that NBFC, or you can say that company. Now, what is that criteria? Let's understand. Out of the total assets, of the company, at least 50% assets are the financial assets. Means if we talk about an asset size of 100 crore, then out of 100 crore, at least 50 crores, means more than 50 crore or at least 50 crore has to be those assets which are financial assets. Now, what do you mean by financial assets? Financial assets simply would mean those assets which are used for business which is financial in nature. And just to correlate this set of business and to understand this in a better manner, we can just give the reference of banks. For example, if we go to a bank, what will the bank do? If we require a loan, bank will give us a loan. What is the nature of the business of the bank? To give the loans. And banks also accept loans. So similar is the course of set of activities of NBFC also. NBFCs also accept loans and they give loans. Yeah, so these are the set of assets which we call as financial assets. So if we say that out of the total assets of the NBFC or the company, forget NBFC for the time being, say a company, at least 50% assets are financial assets. They constitute at least 50%. Okay. So this is the first criteria for a company to be assessed whether it would become NBFC or not. So first criteria says out of total assets, 50% should be financial assets. Next, over and above that means in addition to this condition, we also need to look at another condition. What is that condition? Out of the total income of this company, at least 50% of the income should be from those financial assets. Okay, so if we look at the total income of the NBFC or any company, and we understand that the 50% income is the income from the financial assets. For example, a company has given a loan to a third party and the company is earning interest on those loans. So what do we call it as? Financial income. Company has given deposits to various parties and company is earning interest income on those deposits. Now, what is the nature of this income? Once again, this is the income from financial assets, or in simple terms, we can say this is financial income. Okay, so now if we look at this set of income, so we would say 50% is something which is financial income. Financial income, for our purposes, we are saying is that income which is generated from these financial assets. Because these financial assets are generating this financial income. Now, with this, I'm hoping you would have also understood as to what is the nature of the business of an NBFC. NBFC, now as we understand, is nothing but a substitute of banks. Banks are not the only organization which are involved in these set of activities in India. And they will not be sufficient to cater to all of these financial requirements. That's why another set of entities was established, which are called as non-banking financial companies, which had nature of its business, which was largely similar to the banks. It's not exactly similar. largely similar to what we see in case of banks. So therefore, what is the nature of the business of NBFC? Same. It's the financial activities into which this remain largely involved. And that is the most important ingredient. That is something we need to assess every time we look at any entity and we try to assess whether the entity will become NBFC or not. And this assessment of checking the financial assets and checking the financial income from the total assets and the total income respectively is also called as 50-50 test. 50-50 test means whenever we have to check whether an entity, irrespective of whether it is registered as NBFC or not, I'll come to the registration requirements also. I'm saying irrespective of whether it is registered as NBFC or not. If we establish yes, that 50% out of its total assets are financial assets and 50% out of its total income is financial income, then such an entity will be considered as NBFC always. Such an entity will be considered as NBFC always. Okay. Now, because these entities are involved in the nature of business, which we understand is similar to banks. So that's why, what do we see? That the public interest is involved in these entities significantly. Yeah, it's largely public interest which is involved. Why? Because they are taking deposits, they are giving deposits, they are taking loans, they are giving loans, and a lot of public dealing is also involved. And because these entities are significantly involved with the public, because the public interest is significantly involved, that is why we see that these entities become subject to some stringent regulations. Okay, and these stringent regulations are over and above what we see in case of any other company. Now let's try to understand what is that first set of stringent regulation which is applicable to an NBFC. The first and the most important is about the RBI regulations. There is a separate act which is only for the NBFCs. Means for the NBFC, there is a separate act in place. Act to drive various requirements related to NBFCs. Every NBFC is required to be registered with RBI. And once they get registered with RBI, they will be required to comply with various rules and regulations which RBI will require, except for certain exceptions which we are going to talk about as to what are those exceptions in respect of such type of NBFCs. So now, first set of regulation, what do we find is coming from RBI. And this happens to be the most important regulation also. Why? Because NBFCs are governed by RBI. That's why each and every NBFC is required to be registered. And once the registration is done, it will be able to commence its business of NBFC. Without the registration, NBFC cannot commence its business as an NBFC. So let's understand what is the criteria. First, for the registration criteria, a certificate of registration has to be obtained by the NBFC from RBI. And for this to be obtained, NBFC should have a net on fund. NBFC should have a net on fund which is 2 crore. Which is 2 crore rupees. Now, what do you mean by net on fund? What is this requirement of net on fund? the time being, let's simply consider as if it's the capital of the NBFC. Like for any company to start with, what will that company need? Some capital to be inducted so that the business is run, so that the business can be commenced. Now, similar to this, NBFCs are also required to have some capital required. And for the time being, you can just say in simple terms, this net on fund is nothing but the capital requirement of the NBFC. And unlike in case of any other company, what do we find? That this capital requirement of NBFC is significant. For a company, what do you generally find? That the capital is only 25,000 or say 1 lakh or say, in fact, in current scenario, a company can have a capital of as low as say rupees 10. Here, there's no minimum threshold also, which is something which is applicable to a company. But for an NBFC, this capital has to be there because all of these NBFCs are significantly involved with public. So that's why they need to have some minimum level of capital requirement, which cannot be breached. And this is again something which we'll discuss in more detail as to how this capital requirement will really impact the NBFC as they will move on. All right. Yeah. So this is about the NBFCs in terms of their registration, which they need to obtain from RBI. Plus, they need to have net on fund. Only when these two things are in place. What are those two things? Registration certificate and net on fund. An NBFC can commence the business of an NBFC. Otherwise, not. Otherwise, it's not allowed. Now, let's take an example. Something in line with what we just discussed. In fact, at one point of time, I also specified that irrespective of whether a company has taken the registration of certificate of NBFC or not, this 50-50 test is required to be assessed. Remember? Yeah. Now, let's take an example to discuss this, and we'll discuss some more thoughts around it. Just give me 1 minute. So I just stop sharing the screen. I'll just put a file. All right, so let's take an example. Say there is a company ABC Limited. Now this company is not registered as NBFC as yet. Okay, this company is like any other company which was carrying on some business. We don't know what was the business of the company as of now. Let's simply say that this was not carrying on the business of NBFC, and that's why it didn't require the registration certificate which NBFCs require. Now, during the financial year 2021-22, this financial year is gone. Now, during the financial year 2021-22, what has happened? This company advanced significant loans to various parties. And on those loans, company also earned interest significantly. And over the period, the revenues of the company, which were the revenues for which this company was established, those revenues were significantly lower. Okay. As a result of which, what happened? If we look at the draft financial statements, now because this 20 21-22 is just over. So that's why the set of financial statements of ABC Limited are not yet finalized. So we are looking at only the draft financial statements. Means financial statements are not yet finalized. If we look at the draft financial statements, we find that in the balance sheet, the loans which this company had given to third parties and which are interest bearing, they are significantly high. The company was cash rich and the company had also taken certain loans. So that's why company had adequate funds to give to the third parties if required, which the company had also done. So the company gave loans which are significantly high. So if we look at the total balance sheet means if we look at the total assets, then what do we find? That the loans which the company has given, they contribute approximately 60% of the total assets. Okay. Now they constitute approximately 60% of the total assets. Yeah. And over the period, revenues of the company had significantly declined. That's why company had hardly any revenue during the year ended 31st March 2022. And that's why if we look at the P&L of the company, there are two things we will find. One is of course the revenue and second will be the other income. Second will be the other income. What will be the revenue for this company? Revenue for this company will of course be the revenue from its principal revenue generating activities. Okay, which is a very, very small amount. I'm not getting into the numbers right now. And what is the other income? Other income constitutes interest income. Mainly, this interest income has been earned by the company. This interest income has been earned by the company on these loans. And because this was not the principal set of activity for this company, that's why we are considering this income as other income instead of calling it as revenue. Okay. And during the year, we found that this other income constitutes 70% of total income. Now, what do we mean by total income? Of course, all the credits that we find in case of P&L means revenue plus this all other incomes, etc. We find that this is the scenario. Okay. Now, in this scenario, something unusual is observed. What is this unusual? One, of course, is the loan size, which is 60%, and second, of course, is the interest income, which is 70%. Now, if we were to analyze as to whether this company will become NBFC or not, what is the first thing we will consider? What is the first thing we'll consider? If we were to analyze about this company, the first thing that we'll consider is whether this company is registered as NBFC or not, which we understand that this is not registered as NBFC. Okay, so this is not registered as NBFC. This is something which is clear. Yeah, this is something which is clearly seen. This is not registered as NBFC. Now, let's suppose if you were the auditors of this company and you were to audit the financial statements of this company, we understand that the financial statements are not finalized, but those will get finalized after they are audited. The management is ready with the draft set of financial statements, which can then be audited by the auditor. Now, as an auditor, what are the challenges which are required to be considered, or what are the thoughts which are required to be considered in respect of this situation? Yeah, something which we can see right now for the financial year 21-22. So I have some thoughts. I'll share those thoughts with you, and then I'll request you to just confirm out of those thoughts, which one do you think is the most appropriate out of this one? Okay. Number one, as an auditor, some set of audit procedures that will apply will definitely be on loans, interest income. We will ensure that the documentation around the loans, interest income, their computations, etc. are all fine. Now, because this company is not registered as NBFC, so that's why we will not get into the regulatory requirements or all those set of regulations which are applicable to an NBFC for ABC Limited. We will not get into that. Yeah. So the set of audit procedures which any auditor will apply for audit of loans, interest income will be applied over here. And if these are appropriately covered in terms of their documentation, in terms of their accounting, then we are good to go as an auditor. Okay. Yeah. So this is the first option that is available to us. Second option. Second option is that now we are looking at this company wherein we understand that this company is not generating revenues significantly in terms of its principal revenue generating activities. Okay. That's why what we do as an auditor, we will ask the management to reclassify this interest income to revenue, first of all. We will ask the management to reclassify. That this should be reclassified to revenue. This should not be treated as other income. This should become revenue. Loans are fine in terms of their grouping, etc. Secondly, we will also ensure that some disclosures around this interest income, around the loans, etc. are given in the financial statements. And that is how we will cover it as an auditor. And definitely we'll apply the audit procedures which are applicable to loans, interest income, and various other activities of this company. But this is something which will additionally want the management to do. If they don't do this, then definitely it will become a reporting matter. Okay. If the management doesn't do this, means this reclassification, then this is something which will definitely require some reporting. Now, how is that reporting going to happen? I am not getting into that. Okay. So this will become a reportable matter for the auditor. So this is the other option which we can just consider in respect of this type of situation. Option number 3. Option number 3 requires auditor to assess whether this company is now an NBFC or not. Means during the year 2021-22, even though this company was not registered as NBFC, but this company actually operated as an NBFC. This company operated as an NBFC. And that's why this company is nothing but an NBFC. We can, in simple terms, say that this is an NBFC only, which has not obtained the certificate of registration and which is a non-compliance. And accordingly, all the reporting requirements which any NBFC has, has not done in terms of obtaining the certificate of registration, in terms of doing its various internal reporting requirements to RBI, etc., have not done, will have to be considered by the auditor also. And all of these matters will accordingly become reportable. And why we are saying this entire set of activities to be considered by the auditor? Why? Because if we look at the 50-50 test that is met for ABC, if you look at the 50-50 test that is met, and that's why auditor will have to report all of these matters. Report as if it's a non-compliant NBFC. As if it's a non-compliant NBFC. This is something which will have to be done by the auditor in the third scenario. Okay, yeah. Fourth scenario, we can also look at another option. Fourth scenario is the one which is something in line with third scenario. But over here, we are just trying to dilute it. Why? Because we understand that ABC was never an NBFC and it also did not intend to become an NBFC. By chance, it happened as if this 50-50 test got met. Okay, and this is something which was not intentional. Management didn't realize this and it happened. Had the management realized this, this would not have happened. This won't have happened. Okay, but in the current scenario, this has actually happened. But this is something which is unintentional. So that's why, what should the management do? We as an auditor would want the management to give a note in the financial statements. Note in the financial statements that during the year, such type of event has taken place. I'm just calling this to be an event, that this sort of situation has arisen when the company's advances are significantly higher and the company's interest income is significantly higher, and over which auditor will also highlight the same thing in his audit report. So one is the management will give this in the financial statements in the form of a note, and auditor will highlight this. In the auditor's report. Yeah, otherwise it's all fine. Otherwise there is absolutely no problem as far as all of these options are concerned. Now, out of these options, what do you think will be the right set of option for the auditor to be considered? So over to you quickly. If you can just let me know, out of these options, if you were the auditor of this NBFC, which option you will consider and why? It will be good to understand as to what are the reasons you will consider for each option. Okay. Yeah. So over to you. Just quickly now. So I'll also start with all of these options one by one in terms of their evaluation and to assess as to what should be the right set of option for this situation. Yes. So you can just start sharing your thoughts in the query box only. In the meantime, I'll just start with all of these options in terms of their evaluation. So if we go by the first option, what does this first option require? This requires auditor to remain ignorant of the fact that during the year, company has carried out activities as NBFC. Isn't it? Yeah. In a way, auditor has to become ignorant of this fact. Is that really possible? No. There is absolutely no doubt that during the year, certain activities have been carried out which only an NBFC could do. Though it's correct that in the first option, auditor is carrying out audit procedures for audit of loans, interest, income, etc. But this is not something which the auditor will do for an NBFC. For NBFC, certain regulatory requirements which are required to be considered are also evaluated by the auditor. That's why, can we really go with option number 1? No, this is something which is not acceptable. Okay, yeah, all right. So now moving on to option number 2. Option number 2 is also something which is in line with option number 1 in a way, if you look at it, isn't it? Option number 2 also requires auditor to ignore all of these matters which an NBFC would consider. Why? Because this company was not registered as NBFC. The only thing which option number 2 additionally requires is to do this reclassification. But does it really help? No. In fact, this reclassification is not at all required. Why? Because this is not the principal revenue generating for the company. Revenue generating activity for the company. And auditor may have to look at its memorandum of association also. Is it really there? Is it really allowed on the part of the company to carry out this activity? If not, then absolutely this will not become the revenue for the company. Yeah, so this option therefore anyways is not something which is acceptable. So option number 2 also goes away. Now moving on to option number 3. Option number 3 requires that all the set of audit procedures which an auditor will apply to an NBFC should also be applied to this company. And that is where the auditor finds that this company has actually become an NBFC during 21-22. We cannot say that the management was ignorant, because if the management was ignorant, this is not possible that the management remained ignorant throughout the year. Yeah, because this is not something which has happened at one point of time during the year. This is something which has happened throughout the year. So that is something which is not possible on the part of the management. Yeah. So that's why there's no doubt that this company is nothing but an NBFC. But there's a problem. If this was an NBFC, therefore, to commence its business, company should have obtained the registration from RBI. Yeah, certain regulatory requirements are required to be met. They have to be in place before carrying out this activity by the company. But this was not done. This was not done during the year. That's why, what do we say? That's why we will say that this will have to be reported by the auditor. This company's non-compliances in respect of carrying out all of these activities, yeah, and at the same time not taking the required approvals, not getting into the regulatory requirements which the NBFC is required to do, is something which is important on the part of the auditor to report. So that's why this option looks absolutely fine. So this is something which the auditor will have to consider. Okay. Now, moving on to option number 4. Option number 4 requires that a note should be given in the financial statements by the management, which is fine. Management can definitely give a note in the financial statements, which can also be highlighted by the auditor in his audit report. There's no doubt. But can we just stay limited to only highlighting the note of the management in the auditor's report as an auditor? The answer is no. That will be inappropriate. Why? Because the appropriate option is option number 3. So if we follow option number 4, in a way we are diluting the requirements of option number 3, which is inappropriate. So that's why option number 4 should also not be considered over here. So what will be the right option in this scenario? Option number 3. Clear on this? I can also see one response coming from Sairam. Sairam is saying option number 4, a note should be given in the financial statements and this matter should be highlighted by the auditor that during the year company carried out certain activities which were in the nature of something an NBFC will do, which is fine. Yeah, so if you look at option number 4, there's absolutely no doubt that this is required to be done, but the way this is required to be done is not appropriate. The way it is required to be done is something which is given by option number 4. Yeah, so that's why the right set of option, the right option for this particular situation will be option number 3 and not the option number 4. All right, clear on this? So with this, one point which I just wanted to make you understand was the aspect that even though it's mandatory for a company to get registered and then start the business, in case you come across a situation as an auditor that there's a company which has been carrying out all of these activities and you understand that, oh, this is something which is an NBFC will do. Yeah, but this company has been doing this entire set of activities without obtaining the certificate of registration of NBFC. So in such a situation, will you just remain silent as an auditor, saying that no, because this is not registered as NBFC, so I can't just follow all the requirements of NBFC over here? No. As an auditor, you have to consider this fact that over and above what an NBFC should have done is something which you will apply as part of your audit procedures. There's also a non-compliance and a big non-compliance which this company has done and which is very, very important on the part of the auditor to report in the auditor's report. Okay, clear on this? So you can just keep coming to me with your queries, questions, if any. And great, Sairam, you attempted this. So let's move further. All right, so we discussed about the registration requirements, etc. Okay, so now in terms of the nature of business, as we have discussed that NBFCs are largely aligned to what the banks do, still there are certain differences between these two, means NBFCs and the banks. Let's try to understand those differences, because with the help of this you'll also get a clarity as to what are the differences between these two types of entities. 1. Banks accept demand deposits, okay, which the NBFCs cannot do. However, in certain scenarios, NBFCs can accept term deposits. Now, mind you that term deposits are different from demand deposits. Okay, so we are not saying that they cannot accept deposits at all. In certain situations, they can accept deposits, but those have to be term deposits, not the demand deposits. NBFCs do not form part of payment and settle mechanism. They don't issue checks. Have you ever gone to an NBFC with a check in hand, wherein you go to an NBFC and get your check cleared? Something which you will do in case of bank? No. All these systems of settlement, payment, issuing checks, drawing checks, all of these are limited to the banks. NBFCs are not allowed to do these sets of activities. Okay. Number 3, deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation, means DICGC. So this deposit insurance facility is something which is available to banks. In a way, the banks get guarantees from this authority, or you can say this organization or this body. Which body? DICGC. But this is not available to the depositors of NBFC. Something which the banks will give you. Banks means the depositors of banks will get. Okay. Number 4, no minimum exposure to priority sector is required by NBFC, which is something you'll see in case of banks. Yeah. So these are the differences which you will find between the banking company and the NBFC. All right. Yeah. So now I'll move further with some more details about the NBFCs or the types of NBFCs. But before that, I have this query from Sairam. Sairam is asking, sir, if the company is not doing its principal revenue generating activities because of some reason, and it is only doing the activities which the NBFCs do, then the auditor is required to do the testing. See, of course, yes. As regards the audit procedures, all the activities which the company would have carried out during the year, okay, audit of all those activities will be performed by the auditor. There's no doubt about it. So we are not saying that the auditor will not perform audit in respect of all of those loans, or say interest income, or the deposits taken, or say the deposits taken. So let's suppose there's a company without getting the registration is getting into all of these sets of activities. Audit procedures will be performed on those, no doubt. But before all of these things, or to say that before this set of activities which the company started doing, what was the basic requirement? To obtain a registration certificate. But the company didn't obtain this. Okay. Now, this is something which is very important on the part of the auditor to report. Why? Because it's a big non-compliance which the company has done. And because of which the company will be subject to some stringent penalties. Yeah. Okay. All right. So now moving further. We understand that NBFCs are mandatorily required to get registered with RBI. Now, NBFCs we can broadly categorize into 3 categories. Broadly, we can say there are 3 types of NBFCs. And for the purpose of our discussion, for most part of this chapter, we will be categorizing all of these NBFCs into these 3 categories only, which I am just going to discuss. First is the deposit taking NBFCs, and second is non-deposit taking NBFCs. So I'm saying if there are NBFC, one we can say are deposit taking, and second we can say are non-deposit taking. Okay, yeah. So first is the categorization of deposit taking and non-deposit taking. And deposit taking means taking by the NBFC. It's on the part of the NBFC. Okay. Now, this category of non-deposit taking can then be further categorized. This can be further categorized into two types on the basis of their size. One is systemically important. Second is non-systemically important. So first category is systemically important non-deposit taking NBFCs. Second category will be non-systemically important non-deposit taking NBFCs. And as I have discussed with you, that systemically important and non-systemically important is something which we do on the basis of size. Okay. Broadly, what are the categories that we get for NBFCs? One, deposit taking. Second, systemically important non-deposit taking NBFC. Third, non-systemically important non-deposit taking NBFCs. Okay, yeah. Okay, now, technically, because these names become too long, so that's why there's an abbreviation which is generally used for these categories. Let's understand how is that used. For this systemically important, what do we use? SI. And for this non-systemically important, what do we use? NSI. Okay, what do we use? NSI. For this non-deposit taking, what do we use? ND. Yeah. So if an NBFC is systemically important non-deposit taking, what do we consider in terms of this abbreviation? So this will be called as NBFC dash non-deposit taking, ND, systemically important. So whenever we have this abbreviation NDSI, what does it mean? Non-deposit taking, systemically important. Yeah, AAPE means this one. And if this is non-deposit taking, non-systemically important, then how do we write it as? NBFC dash non-deposit taking, non-systemically important. Okay. Now this is something which is required to be used at various places. So that's why it's important for all of you to appreciate it at this point of time. Yeah. Now this was the categorization of the NBFCs on the basis of whether they accept deposits or not, and on the basis of their size. There's also a categorization of NBFCs which we can do on the basis of kinds of activities. Let's understand that basis. Investment and credit company, infrastructure finance company, systemically important core investment company, infrastructure debt fund bank, non-bank NBFC, no NBFC microfinance institution, NBFC factors, NBFC non-operative financial holding company. Yeah, so this is a categorization which we can do on the basis of activities, but we are not required to get into too many details around it. Okay, now moving further, something which we just touched upon it again, I'll not get into too much details around this aspect over here. There are certain companies which are exempted from the registration requirement of RBI. These are NBFCs only. And despite being NBFCs, they will not require registration from RBI. Why? Because they are regulated by some other authority. And because they are already regulated by some other authority, that's why additionally this regulation from RBI, which we have just discussed, is not applicable to these types of NBFCs. Let's understand these NBFCs. Housing finance institutions, they are regulated by a National Housing Bank. Merchant banking companies, they are regulated by SEBI. Stock exchanges, they are again regulated by SEBI. Companies which are engaged in the business of stock broking, means the stock brokers, they are again regulated by SEBI. Similarly, there are various other companies. If you look at Nidhi companies, venture capital fund companies, microfinance companies, mutual benefit companies, mortgage guarantee companies, then we have securitization, reconstruction companies, alternative investment fund companies, core investment companies. All of these companies, because they are already regulated by some other authority, that's why they will not be required to obtain the registration from RBI. Yeah, so you can say that these are the exempted category. All right, clear on this? Okay. Now, moving further. Now what we are going to do is we are going to discuss certain regulations which are specific to NBFCs. And over here, I'll require your understanding, knowledge of banking companies. I'm sure you would have covered banking companies already at the intermediate level also. NBFCs also at the intermediate level. And of course, the advanced accounting that you would have covered, yeah, something which you have seen at paper 5, in paper 5. There are a lot of similarities in between banking companies and the NBFCs in terms of the regulations which are applicable to them. Means if we look at these two types of companies, then principally you will find a lot of similarities in terms of the regulations. However, these regulations will change in terms of the numbers which are involved. Or you can say certain percentages which are involved. For example, if we say that NBFCs are required to maintain a certain ratio, okay, what is that ratio? I'll come to all of those ratios also. Let's say NBFC is required to maintain a certain ratio of 25% throughout the year. Okay, it's an ad hoc example I'm giving. You will generally find that the banks are also required required to maintain such types of ratios. That may not be 25, that may be 23, 20 or 30. So I'm saying generally what you will find is that in terms of the principles or in terms of the regulations, they are principally same in most of the cases. However, the numbers around them will vary. Okay. So now we are going to touch upon some such types of regulations which are applicable to NBFCs. And you will find that in case you remember some of the aspects related to banking companies, that most of these regulations are also there in case of banking companies or the banks. Okay. First is the capital requirement. First is the capital requirement. Now, what is the capital requirement? Let's try to understand. And why is this requirement in place? If you remember, we discussed net owned funds. Remember, we discussed net owned funds. That NBFCs need to have minimum net owned funds to commence their business, which is also called as NOF. Remember that? Now, what are these net owned funds? Net owned funds are nothing but the capital. Yeah, something we discussed. And we also found that the net owned fund requirement or the capital requirement for an NBFC was 2 crore minimum, which is a significant amount. Now let's try to understand why is this requirement in place. Now here again, it's important to understand the fact that NBFCs are subject to, or NBFCs are significantly involved in dealing with public. Public interest is involved in NBFC significantly. Correct. That's why what will happen? To protect that interest, it will be important to ensure that NBFCs maintain adequate funds. NBFCs maintain adequate funds. And these funds are best maintained in the form of capital. Why? Because funds can only be maintained in two forms. Either it can be a capital or it can be a funding. Funding means a loan which is taken. Now let's consider a scenario wherein an NBFC is taking a loan and then giving this loan to a third party. Okay. All the loans which the NBFC has given to a third party are also obtained by NBFC from some other party. So this NBFC is taking the loan and giving the loan. Now let's look at another NBFC. This NBFC has got its own funds, means its own capital. And this NBFC is giving this capital as a loan to third parties. Out of these two NBFCs, which one will be considered to be relatively safer? Of course, the second one. Why? Because it has got its own funds. So tomorrow, if the third parties fail to make the payment, what will happen? NBFC will lose out their own money. But in the first scenario, if the third parties fail to make the payment to NBFC, what will happen? NBFCs in turn will also not be able to pay back to other parties from whom NBFC would have taken the loan. Yeah, that's why to protect the interest of the public, a minimum capital ratio is required to be maintained by NBFC. Okay. Okay, a minimum capital ratio is required to be maintained by NBFC. And what is that minimum capital ratio? It should be not less than 15% of its aggregate risk-weighted assets on the balance sheet and risk-adjusted value of off-balance sheet items. I'll come on to, I'll touch upon this aspect of risk-weighted assets also. For the time being, you can say it's 15%. Now, there are two terms which are used over here. Minimum capital ratio consisting of tier 1 and tier 2. Minimum capital ratio consisting of tier 1 and tier 2 capital. For the time being, you can say that these two are nothing but the capital only. Okay. When we look at the capital of NBFC, capital again will be of two types, tier 1 and tier 2. But both these are nothing but the capital only. So capital has to be 15%. And this 15% has to be out of the total assets of the NBFC. Yeah, means out of the total assets, 15% has to be maintained as capital always. But whenever we look at the assets of the NBFC, these assets are also subject to some risk. Why? Because the nature of the business of the NBFC is such that some risk is involved. Let's try to understand that. What is that risk which is involved? If we look at the cash and bank balance of NBFC, will there be any risk involved over there? No. Why? It's safe money. But if you look at the investments of the NBFC, means NBFC has invested elsewhere. And if those investments are not with the government organizations, wherein the money which has to come back is fully guaranteed, can we say it's risk-free? No. So that means some proportion of risk is involved. That proportion of risk which gets associated with these types of assets is called as risk weight. Means depending on the type of asset it is, a risk assessment is done, and on the basis of that risk assessment, a weightage is assigned to that risk, and that weightage of the risk is then computed with the amount of the asset. Let's understand how. If we look at the investments in approved securities, if these are approved securities, then of course the risk is zero. But if we look at the bonds of public sector banks, those are not fully safe. Some risk is involved. So that's why we say that risk weight is what? 20%. So whatever money has been invested in the bonds of public sector banks, 20% of that amount is risk. Okay. So out of the total assets, what do we compute? Risk-weighted assets. And for these risk-weighted assets, we need to compute that proportion of 15% as capital requirement for the NBFC. Now, all of these percentages of risk are not required to be computed by us. These are all driven by the regulatory requirements, something which the RBI does. And RBI notifies this. Yeah. RBI notifies this. We just need to follow all of these risks which are assigned. Now, a question may arise that do we need to remember all of these risk weights? The answer is yes. I would suggest if you can just flip through all of these requirements of risk weights. So there are various assets of the NBFCs against which the percentage weight is assigned. You can just flip through them, just read them maybe 3-4 times, and you will be able to memorize all of these risk weights. It's good to remember all of these risk weights. Okay. Coming back to the capital requirement. So we have understood that 15% is the capital requirement. Now I'll just touch upon this tier 1 and tier 2, though we don't need to get into too much technicality of tier 1, tier 2 over here. Tier 1, you can say, is the core capital of the NBFC. Means it's the pure capital of the NBFC. It's the core capital. There's no dilution. Tier 2, you can say, is the second category. Second category means which is not really the core capital, which has got some other ingredients also which form the capital. For example, if you talk about preference shares. But for our purposes, for us to look at this percentage requirement, both the capital will form part of the capital requirement to be considered for this 15%. Okay, clear on this? All right. Moving further on to the most important and most interesting part of this chapter. I would say this is, in fact, one of the most important part, most interesting part of this chapter. And I'm sure many of you would be familiar with this. You would have covered this already. Huh? That is about the income recognition and the asset classification requirements for NBFCs. Let's understand all of this. Touching upon the income recognition. NPAs, we all have heard. In fact, in today's scenario, over the years, particularly over the last few years, we keep hearing about NPAs of the banks, okay, NPAs of the financial institutions, which have increased significantly, and there are various regulations which are put in place to manage all of these NPAs. There's also a law which is dealing with some of these NPA requirements of the financial institutions. Now, what is an NPA? NPA is a non-performing asset. For an NBFC, what is the core asset? What is the main asset? Main asset is the loan or advance which NBFC will give to a third party, from which it will earn interest. Correct? Yeah. So therefore, if we talk about non-performing asset in respect of an NBFC, then definitely we are talking about all these types of assets. All these types of assets means all of these advances which the NBFCs have given. And just to understand this in very simple terms, I'm not getting into technicality for the time being. Just to understand this NPA in very, very simple terms, in a layman term, say an NBFC has given a loan to a third party for 3 years. So this loan is given for 3 years. And the terms of the loan require that the third party will pay the EMI every month for the repayment of the principal as well as the interest. Means for the next 3 years, the person who has taken the loan will pay the EMI. EMI will comprise of 2 parts, principal and interest. Correct? If the third party, if the borrower keeps paying this EMI in a timely manner, then for the NBFC, what do we call this loan given as? It's a good loan. It's a good loan. Why it's a good loan? Because the borrower is good. Borrower has been making the timely payments. Borrower has not been defaulting on the payments. Okay. Borrower is not only defaulting, but also making the timely payments. So that's why for the NBFC, it will be considered as a good loan, or you can say good asset, or we can say performing asset. Means the asset which is performing as required. However, if let's suppose the borrower doesn't make the payment in a timely manner, means the due date is 5th of every month, but the NBFC gets the payment on 7th or 8th of every month. Means every time there is a delay. For the delay, NBFC charges interest, NBFC charges penalty. No doubt, but still, it's a delay. And there could be another borrower who initially repaid the loan by paying the EMIs on time. But subsequently, that borrower started defaulting in making the payments. He started defaulting in making the payments. Now, because of these defaults, what do we call this type of asset as? A bad loan. Why? Because this asset is not performing the way it should have done. The expectation was that over the 3 years, every month, NBFC will get interest as well as principal. But this has not been happening. Now, in this scenario, for this loan to be called as a bad loan or a non-performing asset, there are certain regulations of RBI which say that if the borrower has defaulted in the first EMI or the very first time he has defaulted, maybe for 1 year he kept paying on time, and this 13th installment which was to be paid has been defaulted, means this has not been paid. So immediately we will not start calling this loan as a bad loan. We will have to wait for some time. We'll have to wait and watch. After waiting for that period, if this default continues, then we will start calling this loan as non-performing asset. Then we'll start calling this loan as non-performing asset. Okay, clear? Now over the next, in fact, our next set of discussion is going to stay focused around this NP only for some period of time. But before that, it's important to understand why we are discussing about NPAs. The way income is recognized by the financial institutions, banks, NBFCs, is impacted on the basis, or you can say is impacted by the fact that whether the loan, whether the asset is performing or not. Because if the asset is performing asset, then the NBFC will recognize income on that asset on accrual basis. Okay, so I would say income recognition, we need to check whether the asset is performing or not. If the asset is a performing asset, then how do we recognize income? Accrual basis. Very simple, accrual basis. So interest income on accrual basis, I hope all of you understand. So I don't need to get into details around that. But if the asset is NPA, if the asset has been classified as NPA, then the regulations say that the NBFC will not record income on those NPAs on accrual basis. In such a case, accrual basis is not allowed. Which basis of accounting for income has to be followed? Cash basis. And you may think, but sir, how is this possible? Cash basis of accounting is not allowed. This is allowed in case of financial institutions for the NPAs. Means we will record the income only when it is received. If the income is not received, we will not record the income. Over and above that, if there was any income in the past period means, let's suppose there was an asset. Let's suppose there was an asset which was performing up to a certain period of time. And over here, it became NPA. Okay, over here, it became NPA. Now, from this very date, which basis of accounting will start following? Cash basis of accounting. Correct? This part is clear and very easy for us to follow. But let's suppose during this period, if there is any income which has been earned but not yet received, why is that possible? Or how is that possible? Because we follow accrual concept for performing asset. So it will be possible, yes or no? So let's suppose there is some part of income over here which has been recorded in the books, which has not been received as yet. So therein, what is required to be done? This income will have to be reversed. This income will also be required to be reversed. So even though this was recorded, still we'll have to reverse it. Yeah. So just to summarize, what do we say? Performing asset, record on accrual basis. Non-performing asset, record on cash basis. But in respect of non-performing asset, if there is an income which is sitting in the books but not yet realized, that needs to be reversed. That needs to be reversed. Clear? Clear on this? Okay. Now the next part that we are going to pick up is about the types of assets, the way the regulations require. And for all of these types of assets, the basic premise that we are going to follow in respect of their categorization will be NPA. Means for us to categorize all those assets into those categories will be on the basis of the fact that whether they are performing, or they are NPAs or not. Okay. Now this categorization, again, I'm sure is not something which is new to all of you. Every NBFC will have to classify its assets into 4 categories. Which category is this? Standard assets, substandard assets, doubtful assets, loss assets. What do you mean by standard asset? This performing asset we have just discussed is nothing but we can say is the standard asset. Means assets for which everything is going fine. There is absolutely no problem in the asset. There is absolutely no problem in terms of getting the principal from the borrower, getting the income from the borrower. If you look at the credit worthiness of the borrower, that is also fine. If you look at the risk assessment of the borrower, that is also assessed properly and everything looks fine as far as the performance of that asset is concerned. Okay, yeah. So this type of asset is called as standard asset. In very simple terms, we can say an asset which is good. Standard asset means a good asset. There are three more categories which the regulations require NBFC to consider. All these three categories are in respect of those assets which are NPAs. Means once the asset will not remain good, once the asset will become non-performing, then its categorization will start changing. From standard, it will become substandard. And the more and more deterioration the asset will get, its categorization will keep going down. Let's understand how. So if we were to go back to that chart, let me just go to that chart. Okay. So the very first category for us is what? Standard asset. Oh, just give me 1 minute. The very first category for us was standard asset. Let's suppose now the asset has started deteriorating. Means the deterioration has started. It has not deteriorated completely. Deterioration has started. So we are just going down from standard to substandard. So we'll go from standard to substandard. If let's suppose this deterioration continues, then from substandard, where do we go? Doubtful. And if this continues further, then we'll go to the last point. What is the last point? Loss asset. This last stage is the worst stage. During these two stages of calling it as substandard or doubtful, there is some hope of recovery of the amount from the borrower. But when it comes to the fourth stage, this stage, you can just simply say that all the hopes of recovery from the borrower are gone. Means it's lost. It's believed as if nothing will now be realized from the borrower. So you can say it's the worst form. Okay. So now what do you see? From best form, if we go up to the worst form, then in a way there are 4 stages which are required to be considered by us. Okay. Now all of these 4 stages are very, very important to be considered. And I'll just touch upon some of these stages right over here. Why? because now we need to get on to the principle of prudence. Now, considering the fact that these entities are the one wherein public interest is involved significantly, that's why RBI requires that the moment an asset becomes substandard or NPA, wherein it can be substandard or it can be doubtful or it can be a loss asset, such NBFCs should start creating provision for those assets. You can just relate to this with the provision for doubtful debts, provision for debtors. In case of a company, do we get to see? Yes or no? Yeah. When do we create a provision for debtors? When we believe that the debtor will not make the payment. So what do? You create a provision. So in a way, you are booking an expense. They will keep trying for the recovery of that amount from the debtor, but still at the back end you will have a provision in place. Same is the thing over here. RBI requires that for all of these three categories a provision should be made. Why? Because now we are not sure of recovering the full amount from the customers of the NBFC. In case of loss asset, we know everything is lost, so nothing will be recovered. In case of substandard, something is lost. In case of doubtful assets, something is lost. But still, provisions are required to be considered for all three. We'll understand as to what are those provisioning criteria one by one. But in this case, there is another very important aspect, and that is about the standard assets. Even though we call these standard assets as the best form means they are the good assets. They are the good assets. But we must understand the fact that all of these assets which have become substandard today or doubtful today or loss asset today, they were also standard at some point of time. To begin with, no asset will be substandard, isn't it? At the beginning, every asset will be standard only. Every asset will be good only. Yes or no? Only then the NBFC will advance money to a customer or to a borrower when the NBFC would have carried out its assessment of recovery from the customer. Still, what do we find? That some assets move from standard to substandard or to doubtful or to loss assets. That's why RBI says that even though standard assets are good assets today, we must make a provision for these standard assets also, following the principle of prudence, just to be conservative in terms of our approach and considering the fact that the public interest is significantly involved over here. We must create a provision for standard assets also. Though this provision will be of a very small amount, but it's appropriate to consider a provision for standard assets also. Clear? Clear on this? Yeah? Any questions, any doubts that you may have on this? Just please keep sharing. Sairam is asking for the screen. No, I believe that was the changeover when I moved from this PPT to Word file. I'm hoping the screen is all visible. So I'll come back to the presentation now. Okay, so now we will move on to the provisioning requirements. Provisioning requirements for various types of assets, for standard assets, substandard assets, doubtful assets, and the loan assets. For all of them, we will discuss this one by one. Okay, yeah. And along with the provisioning requirement, we will also discuss as to when an asset will become substandard, when an asset will become doubtful, when an asset will become, say, a loss asset. Yeah, clear on this? Okay, so before I touch on this, just give me 1 minute. Okay. For the standard asset, we have already discussed that standard asset is nothing but a good asset. So we don't need to look at any period for this asset. Yes or no? Yeah. Moving on to substandard asset. Let's understand when would an asset become substandard asset. An asset which has been classified as NPA for a period not exceeding 18 months. And over here, now the categorization of NBFCs will become important. Now the categorization of NBFCs will become important. Which categorization? If you remember, we categorized NBFCs into 3 types: deposit taking, systemically important non-deposit taking, and non-systemically important non-deposit taking. Now, depending on the type of NBFC it is, their classification requirements may also change. Their provisioning requirements may also change. So that's why whenever we will look at the classification requirement, whenever we will look at the provisioning requirement, we will always have to check. What type of NBFC it is. So in the first instance, what do we find? The period of 18 months. If an asset continues as NPA for a period of 18 months, it's not exceeding, means up to 18 months. Means if an asset remains NPA for 18 months, it will become substandard. However, this period of 18 months has to be considered for NBFCs which are non-systemically important non-deposit taking only. Means for other types of NBFCs, this period is not 18 months. Means for other types of NBFCs, which other types? Deposit taking and systemically important non-deposit taking. For these 2 types of NBFCs, this period of 18 months has to be considered as 12 months. Okay. Now, what I will try to do is, I'll just try to put across this information into a table, and I'm hoping that this will really help us. So just give me 1 minute. Just give me 1 minute. Okay. So now, what did we find first? We found that for an asset to be called as sorry, I'm not sharing the screen right now. So I'm just putting across this information over here. For an asset to be called as substandard, it has to remain NPA. It has to remain NPA for 18 months. Or it has to remain NPA for 12 months. Just give me 1 minute. Screen is not yet shared, so don't worry. Or it has to remain for 12 months. I'm just putting it across in the Excel. Okay, so now I'm just sharing the screen with you. Okay, so I'm just trying to put together this information. Now, the first assessment which we did was for non-systemically important non-deposit taking, 18 months. Okay. If it is non-systemically important non-deposit taking NBFC, then what is the requirement? 18 months. And for other one means if it is systemically important non-deposit taking and deposit taking. Deposit taking means DT. So I'm only writing it as systemically important non-deposit taking and deposit taking NBFC. Over here we can just put a dash over it. Non-systemically important non-deposit taking NBFC. Correct? Yeah. So that is how we call an asset as substandard or standard. Okay, clear? All right. So now moving further. For the substandard asset, there is another assessment which is required to be done, and that is about its restructuring. So if an asset has got restructured means, let's suppose if NBFC has given a loan and its principal or its interest or its period of repayment have been renegotiated, rescheduled, restructured, then also it will be considered as substandard asset. Okay. Yeah. Next is about the doubtful asset. Now, doubtful asset, what does it mean? A term loan or a leased asset, hire purchased asset, or any other asset. So we are talking about 4 types of assets. Okay. Which remain substandard for a period exceeding 18 months. Now we are crossing that 18 months. So if any asset of any of these nature means any of these, if they remain substandard for a period exceeding 18 months, and where do we consider exceeding 18 months? In case of non-systemically non-deposit taking. Okay, because in case of systemically important and deposit taking NBFC, this period was not 18 months. This was 12 months. So that's why over there, we will not consider this as 18 months. We will consider this as 12 months. Clear? Clear on this? Yeah. Okay, so now what I will do is I'll just once again put this information in the same table, and this table will be quite helpful to you. Yeah, so let me just go to that table once again. So now we are looking at doubtful asset. Now over here, what do we call this as? If this is substandard for period greater than 18 months. Okay, let me just give some space. And in this case of systemically important non-deposit taking and deposit taking, we have to just change this period to 12 months. Clear? Now you can just see with the help of this table, it becomes so easy for us to understand and remember all of these terms. Yeah, yeah. So I think you can just use this table. This will be quite helpful. All right. Yeah. Okay. So now let's go back. So this was about doubtful assets, wherein we consider 4 types of assets. For any of these types of assets, this was the criteria. But we are not limited to only these 4 types of assets. There can be more types of assets. Next is the category of loss asset. Loss asset is very simple. Therein we will not go by the criteria of months. Very simply over there, judgment has to be applied. And what is that judgment which is required to be applied? We need to assess whether this money will now be recoverable at all or not. We need to check the rating of the customer. We need to check the risk which is involved with the customer. If we believe that has increased significantly, if we believe that the credit worthiness of the customer has gone down significantly, that the chances of recovery are very low, what do we call this asset as? Loss asset. Okay, so that's why when it comes to a loss asset, we will not be required to again get into that complication of categorization of NBFC. Okay, clear? Yeah. So this was about the classification of an asset into 4 categories. Now for us to consider these categories, another very important point which arises is the understanding of NPA. Because every time when we are calling any asset as substandard or doubtful or loss asset, what are we saying? It has to be an NPA. Now, when do we call an asset as NPA or PA? So there again, we need to go by the criteria which is specified. So let's understand this criteria. Non-performing asset shall mean an asset in respect of which interest has remained overdue for a period of 6 months or more. Term loan inclusive of unpaid interest when the installment is overdue for a period of 6 months or more, or on which interest amount remained overdue for a period of 6 months or more. So please remember that if we are talking about an asset, we are talking about interest which should be overdue for 6 months or more. What do you mean by overdue? Now this is very, very important term, overdue. Overdue means something which has crossed the stage of its due date. Let's suppose due date was 30th of the month. Let's suppose due date was 30th of the month. So up to 30th, it is not yet due. After 30th, it will become overdue. Okay, clear? Clear on this? If it's a term loan, wherein we are considering both principal as well as interest, installment, which comprises of both principal as well as installment. What period we will consider? That the period of default continues for 6 months. 6 months. Yeah. Next, a demand or call loan which remained overdue for a period of 6 months or more. A bill which remains overdue for a period of 6 months or more. Interest in respect of debt etc., or various facilities which remained overdue for a period of 6 months or more. Any dues on account of sale of assets, services, etc., which remained for a period of 6 months or more. Okay. Now, please remember that once again for this NPA assessment, even though we are talking about this period of 6 months or more at every place, this period of 6 months or more will not be 6 months or more for every type of NBFC. Please remember, NBFCs covered in NBFC systemically important non-deposit taking and deposit taking. For these types of NBFCs, instead of 6 months, this period will be considered 3 months. Okay. So if the NBFCs are, so let me just again go to that table. There again, we will put down this information. Okay, so if we talk about NPA, so we are saying if it is non-systemically important, non-deposit taking, then it has to be overdue for 6 months or more. But in other categories of NBFCs, we have to consider it as NPA if it is overdue for 3 months or more. Clear on this? Yeah. So in the exam, you have to be very, very careful. Depending on the type of NBFC it is, this period will vary. Yeah. And I think therein this chart should really help us. Okay. Clear on this? Yeah. So let's go back again to that presentation. Yeah, so we talked about certain categories of NBFCs and the NPAs. Now, further on to these NPAs, if we are talking about lease rental and hire purchase installment. Now, so far, all the assets categories which we discussed for NPAs was other than lease rental and hire purchase installment. Okay, if it's lease rental and hire purchase installment, then the period for overdue for calling it as NPA will be 12 months or more. It should be overdue for 12 months or more. And this 12 months or more will be cut down to 3 months or more, in case it is systemically important non-deposit taking and deposit taking. So let me just once again put down this information in the table. Okay. Yeah. Lease rental and hire purchase installment. So let's go to that table. So we are talking about lease and hire purchase becoming NPA. Yeah. So if we are talking about these assets becoming NPA, then the period for overdue over here is 12 months. And this period continues to remain as 3 months. Okay. Clear? Yeah. And in this case, we can say it's other assets. Okay. Ideally, it should come first. So I'll just put down this information first. Let me just put this information over here. All right. Yeah. Okay, yeah. So let's go back to that discussion on NPA once again. So we talked about this category of asset also. And then it further says in respect of loans, advances, or any other credit facility, the balance outstanding under credit facilities made available to same borrower for which it has become NPA. Means if there is a borrower, he has taken credit limit, say CC limit from a bank, and a term loan from the, sorry, CC limit from the NBFC, and say term loan from the NBFC. Okay. Now, this term loan has become NPA, though this CC limit or the other types of loans which the same borrower has availed from the NBFC, they continue to remain good. Still, because one of its loan facility has become NPA, that's why all other loan facilities will also become NPA. Okay, yeah. So means in a way we are making the customer as NPA, not his credit facilities as NPA. Now this is very important for you to understand that whenever we talk about NPA, it's about the customer assessment, which is the most important factor to be considered. Clear on this? Yeah. All right. So if you have any questions, any doubts around whatever we have discussed so far, just put across your queries, and we can have a discussion on this. And I understand this session is quite stretched, so let's take a break now. And after the break, we will continue with our required discussion on the asset classification part as well as the provisioning part. So we'll continue on this piece after the break. Huh? All right. So let's take a break now. Hi, welcome back. So we'll now continue with our discussion. So far, we have discussed about the classification of various assets of NBFCs. In terms of the classification, some of the aspects, I'll reiterate, has been around the categorization of NBFC. Depending on the categorization, we discussed that their classification will get impacted because the period which we consider for NPA, for substandard, for doubtful asset keeps changing. So we need to be careful around it. Now, why was this classification important? Because depending on the classification, we need to create the provision for those types of assets. And we also discussed that this provision will not be limited to only the assets which have got deteriorated. Which are the deteriorated assets? Substandard, doubtful, loss, they are deteriorated assets. Over and above that, we discussed that even the standard assets will require some provisioning. So let's understand the provisioning requirements. Loss assets. Loss assets are those assets wherein the chances of recovery are almost over. So that's why what is required? 100% provision. The moment we say an asset is a loss asset, it's bucketed under loss asset. 100% provision for such asset is required to be made. Okay, clear? All right. Number two category is for the doubtful assets. Now, this category will require certain considerations. Now, for the doubtful assets, 100% provision is required to the extent advance is not covered by realizable value of security. Means, if the NBFC has given a loan to a third party, and the third party means the customer has given a security, and this loan to the customer is now considered as doubtful asset. So what do we need to do? We need to create a provision for 100% of the loan amount which is outstanding. But if some security from this customer has been received, then the amount of the security needs to be adjusted with the amount of loan first of all. If let's suppose amount of loan outstanding as on today is say 100 rupees, against which we have a security whose realizable value is 50. So the balance amount is 85. Now 85 is the amount which is unsecured in a way. So this 85 should be provided 100%. So this needs to be provided 100%. Means out of 100, 85 should be the provision amount. Clear? In addition to item A above, means over and above this provision of 85, depending upon the period for which asset has remained doubtful, provision to the extent of 20 to 50% of the secured portion shall be made. Now, in this case, let's understand what are we trying to achieve. Out of 100, as we discussed, there were two parts. 85 which was unsecured and 15 which was secured. Correct? 85 which was unsecured and 15 which was unsecured. Okay. Now for 85, 100% provision is required to be made. The moment it becomes doubtful, 100% provision will be made. But for this 15, no provision was considered by us. Now, in this case, for this 15, we need to check what is the period for which this asset has remained doubtful. If it is up to 1 year, if it is up to 1 year, then this 15 will be provided 20%. If it has crossed 1 year, but it is up to 3 years, then for this 15, provision should be made 30%. If it is more than 3 years, then for this 15, 50% provision should be made. Okay, means every time an asset is doubtful, our problems will increase. Why? Because every time we will have to segregate its amount into two parts, secured and unsecured. For unsecured, the life is very simple, create 100% provision. But for secured, we will have to consider this period. On the basis of this period, we will have to create the provision. Clear on this? Clear on this part? Yeah. You can just keep sharing your queries. All right. So now moving further. In case the asset is substandard, then we don't have any complication of creating a bucket, of considering the type of NBFC, or considering whether it's secured or unsecured. Straight 10% provision has to be made. 10% provision has to be made. Okay. However, in case the asset is standard asset, in case the asset is standard asset, therein again, depending on the type of NBFC it is, depending on the type of NBFC it is, provisioning percentage will change. As we discussed that the provisioning percentage for standard asset is a very small amount. So that's why, what do we find? Every NBFC which is systemically important, non-deposit taking and deposit taking, will make provision for standard assets at, I think this is 0.4%, but this is up to 31st March 18 only. So for us, what is the relevant percentage? For us, the relevant percentage will accordingly be, of course, this shall make the provision at 0.40% by the end of March 18 and thereafter. So it's 0.4%. And for the NBFCs which are non-systemically important, non-deposit taking, the provisioning percentage will be 0.25%. Okay. So now what I will do is I'll once again go to that table. So let me just go to that table once again. For non-systemically important, non-deposit taking NBFC, what's the provision percentage? It's 0.25. So now I'm just saying provision for standard assets. It's 0.25% for non-systemically important, non-deposit taking NBFC. However, if it's systemically important, non-deposit taking and deposit taking NBFC, then it is 0.40%. All right. Yeah. Clear on this? Now this chart is something you can just take a screenshot for this. I'll also share this with you. So this will really help us at the time of revision. Okay, because this summarizes some of the requirements in relation to, first of all, creation of provision, and then of course about the categorization of NPAs, and then of course the classification of NBFCs into substandard or the doubtful, etc. Clear? Now, as an auditor, what is important? All of these provisioning requirements that we have discussed, all of these income recognition criteria we covered, all of these asset categorization we discussed. Yeah. Why was this important for us as an auditor? Because if you were the management of the company, you would do this while preparing the financial statements. You would ensure that all of these compliances would have been taken care of by the management only. But as an auditor, it's very, very important to be aware of all of these regulations. Because if we were to audit the company, and if we are not aware of all of these regulations, then as an auditor, can we really check whether it's correct or not? Not possible. So that's why knowledge of rules and regulations, understanding of all of these compliances is extremely important. And these are some of the peculiarities which you will find only in case of financial institutions. By financial institutions, we mean to say banks also. When you go to the banks, in terms of their assessment, they will also have the criteria, asset categorization similar to what we have discussed. Though the criteria of period, percentages of provisions over there may not really align with what we have seen in case of NBFC, but things are largely the same thing. Okay, clear on this? Clear on this part? All right. Now, as an auditor, once we understand all of these things are important, all of these things are required to be considered. Let's now try to understand how will an auditor audit all of these areas. So one is of course the knowledge which the auditor possesses. Yeah, so auditor now possesses all of this knowledge. Now let's suppose if we were to audit an NBFC, how do we gather this data? How do we capture this information, or to what extent we will capture the information on the basis of which some of these compliances will be audited by us. Yeah. So what I'll do is I'll just get on to some of the audit procedures in general, and on the basis of those audit procedures we'll also try to make out as to how some of these peculiarities can also be audited by the auditor. Now I'm just going back to the audit principles in general. So I'm not specific to NBFC now. Let me just go back to your understanding of the audit of any entity. Now for an audit, what is the first thing we will do as an auditor? Of course, it's the understanding of the business, which is the most important aspect. Understanding of the business, understanding of the entity, understanding of its processes, understanding of the industry in which it operates. So it's about the surrounding, it's about the economic environment in which the entity operates is the first and foremost step. This is also something which is a part of planning procedures, because until and unless we go through all of these understanding about the business, we will not understand the transactions in detail. So that's why it's very, very important to understand all of these transactions in detail. Okay. And for us to understand the risks which are involved in some of the transactions, or in respect of some of the compliances which may have an impact on the financial statements of the entity, there again, what becomes important? Understanding of the organization. Now let's apply this procedure on NBFC also. Because as we discussed, NBFC is also an entity like any other entity, So therefore, if you were to audit this NBFC, what is the first thing you'll do? Understand the business environment. And what are the ways to understand this business environment? First, to keep aware of the developments which are taking place at the regulatory side, and to have an assessment of the impact of all of these regulatory developments on the industry. Which is the industry? Means the NBFCs. Next thing will be to understand the business or the operations of the organization. Now, depending on the type of NBFC it is, its business will vary. If it's deposit taking, its business will be different. If it's non-deposit taking, its business will be different. If it's systemically important, it's non-systemically important. This will again reflect the size of the business of the NBFC. But how do we really get onto this understanding of the business? So what are the documents as an auditor we need to look at? So some of the basic documents which as an auditor we can look at, if this happens to be a continuing client, means in the last year also this was audited by the same firm, and the same firm is auditing the NBFC in the current year, then of course it will be the previous year's working papers. That will give us an understanding, insights about the organization in terms of their operations, which can then be topped upon by looking at the developments which may have an impact during the current year's operations. Second, have discussions with the management across levels. Now, when we say discussions with the management across levels, it will involve all levels of management. But again, depending on the type of level it is, our conversations may vary, our extent of conversations may vary. That is something which has to be planned at the time of audit planning. But all of these discussions, all of these management inquiries, all of these conversations, all of these understanding about the processes of the NBFC is again the way to understand its business. There are certain documents which an auditor would definitely review during the course of his work. For example, customer contracts. Customer contracts in terms of the advances which are given, loans which are given. Every NBFC will have some set of policies and procedures in place, on the basis of which transactions are carried out with third parties. It is very important to understand the business policies, to understand the set of policies. That will also give insights as to how the NBFC has been operating. Then to go through the minutes of the key committees, go through the minutes of the meetings of the board of directors. That will also give an understanding about the major developments which would have taken place during the year. This will again give us some insights about the organization. If it's a first-time company, if it's a first-time audit the auditor is doing, then of course some of the basic documents which the auditor would want to review will be the certificate of registration. Because remember, that's the first thing which is required to be checked for the NBFC. Whether NBFC has got the minimum level of net on fund and certificate of registration. So these two things auditor will also want to check. Auditor will also like to go through some of the basic documents of incorporation of the NBFC. For example, if we talk about memorandum of association, articles of association, which will give the auditor understanding about the objects clauses, about its internal structuring, on the basis of which auditor will be able to plan his audit procedures around the basic structure. Clear? Next, now once the processes of the NBFC are understood, once an understanding about its activities has been obtained, what is the next thing which the auditor would want to do? Next thing which the auditor would want to do will be the risk assessment. And please remember, this risk assessment is no different than the risk assessment that you would have considered for any company other than NBFC. Here again, the processes of the organization will have to be broken into two parts: what is significant and what is not so significant. What are the various risks which are attached to the significant processes and which are attached to the not so significant processes? In relation to the risks which have been attached to various processes, what are the internal controls of the management? Because against every risk, management will have some control. On the basis of the control which is in place, management must be carrying out certain activities. So that's why the next step for the auditor will be to evaluate, will be to do the risk assessment, and on the basis of the risk assessment, get into the evaluation of the internal control system. Means whether the NBFC has got the internal controls in place or not. If the internal controls are in place, are those internal controls operating effectively or not? That is another very important area on the part of the auditor to understand, because this will again set up the set of audit procedures which the auditor will have to follow at the time of his substantive testing. This will also give the auditor an understanding, or you can say lay down the path for an auditor to just get into this assessment, whether to follow this control reliance approach or no control reliance approach, depending on whether the internal controls of the management of the organization are operating effectively or not. Clear? Next, registration with RBI or certain regulations which are a mandate for the commencement of business of the NBFC are very important for the auditor to be assessed. See, if you look at a continuing client wherein the audit was done by the audit firm in the previous year, therein this checking of registration requirement will not be of relevance. Why? Because this has already been done. So this is something which will form part of permanent audit file. Permanent audit file which carries the working papers which are not required to be revised on a regular basis, which will continue for a long period of time. But when it comes to a first time audit client, first time means the NBFC which is going to be audited for the first time by the auditor. Therein, checking of these requirements related to commencement of business, applicability of NBFC is essential, is something which is inevitable. Yeah, all of these documents, even though NBFC may be registered say 25 years back, it doesn't matter for the auditor. Auditor would still be required to check all of these documents. Why? Because for an auditor to start with, it's important to understand whether the NBFC has got the license to operate or not. Because what is this registration certificate? This is nothing but a license to do this business. So if the license to do this business is missing, then this can really have a big impact on the reporting requirements of the auditor. Yeah, and these are the straightforward documents which the auditor will ask the management and will have to just verify. Next set of documents will vary depending on the type of NBFC it is. Now, this is something which I would say is going to be a bit of technical assessment on the part of the auditor. As we have discussed that NBFC are of majorly three categories. For the purposes of our discussion, we have categorized NBFC into three types: deposit taking, systemically important non-deposit taking, systemically important deposit taking. Now, there are regulations of RBI, regulations which are called as directions of RBI. You can say this is a set of rules which become applicable to each type of NBFC. Now, these directions specify everything which the NBFC is required to do. For example, these directions specify certain activities which the NBFC can do or not do, certain loan limits which the NBFC can advance to third parties, certain reporting requirements which the NBFCs are required to carry out on a regular basis, certain reporting requirements in case of some events. For example, if fraud has taken place, or if there are any fraudulent transactions, or let's suppose if there is an appointment of an auditor. Yeah. So this complete set of activities, in a way you can say policies and procedures which the NBFC is required to follow, is something which forms part of those master directions of RBI. So that is why, depending on the type of NBFC it has to comply with its relevant directions. If those directions are not complied with, then it's simply a non-compliance of law. Why? Because each and every NBFC is required to do regular reporting to RBI. Now, these regular reportings vary depending on the various reports which are required to be submitted to RBI. Now, as an auditor, what is the first step? First step is to understand what are the reporting requirements on the part of the NBFC to the external parties. Are those reporting requirements carried out in a regular manner? So the reporting which the NBFC has been doing must be reviewed by the auditor. And whether those are getting reported in a timely manner or not is again something which the auditor needs to assess, which the auditor needs to check. How will the auditor check it? The basic data which will form basis for preparation of those reports will have to be audited by the auditor. And the reports which have been submitted to the regulatory authorities, those reports are also required to be checked by the auditor. And auditor also needs to check whether all of those reports are getting filed on time or not. Clear? Clear on this? Over and above that, there are various set of audit procedures which any auditor would apply in respect of an NBFC. So what I'll try to do now is, I'll try to get into those set of audit procedures with the help of a checklist. Okay, so I'll just try to get into a checklist through which we will try to understand as to what can be those set of peculiar audit procedures which the auditor would perform for a certain category of NBFC. So we have this checklist, or you can say sort of checklist available with us, which can be considered for a particular category of NBFC, which you can say as investment and credit company. For the time being, we are considering this for investment and credit company, but I'll try to keep it very, very generic, but specific to NBFC. Okay, so let's understand what are all those audit procedures which an auditor will perform in case of NBFC. Before I just run through this list of various points which are written down in the form of this checklist, let's first of all consider the financial statements of an NBFC. Let's think through as to how the financial statements of an NBFC will be drafted, because that will give us a great insight about our audit procedures as an auditor. Okay. So now, if you look at the balance sheet of an NBFC, what is the most important item you will find? Advances and loans given. That's the most important component you will see in the balance sheet of an NBFC. Similarly, if the borrowings have been taken by NBFC, that will also be a major component. But I would say the most important component on the balance sheet will be the advances given. Okay. Therefore, a complete set of audit procedures which can cater to advances will have to be drafted by the auditor. Unlike what you will not do in case of any company which is not an NBFC. Yeah. So you would say that this is something which is very, very peculiar to NBFC. This is not something which you will find in any other company. And let's try to think about the audit procedures we'll try to follow. Now, as we discussed, we are talking about advances given. We are talking about advances given. Now, the first audit procedure which should be considered should be about the categorization of these advances. Means whether these advances are standard, substandard, doubtful, or loss asset. Means as an auditor, what is the objective? To check whether their categorization is correct or not, or whether this categorization is done at all or not. If you look at some of the NBFCs, they don't do this categorization at all. Is that acceptable while preparing the financial statements? No. So if this is not done, then this has to be ensured that the management does this. Otherwise, classification is a problem for this particular NBFC. Financial statements. First, now the other component which will also be visible on the balance sheet itself will be around the provisioning of all of these advances. Though it's good to say that yes, this provision will form part of P&L, but this provision is also something which is accumulated, and this will be adjusted against these advances in the balance sheet only. Correct? Yeah. So in the balance sheet, corresponding to this classification, what is the second procedure which the auditor needs to check? Provision. The accumulated provision. This will not be the year-on-year provision, because that is something you'll get to see in case of P&L. But this is going to be the second objective of the auditor while carrying out audit of NBFC, particularly focusing on the balance sheet of NBFC. Clear? Clear on this? All right. Now, before I get into the specific set of documents which the auditor will verify for these two items, let's also correlate the P&L components corresponding to these items. So now In case of an NBFC, if you go to the P&L, what is going to be the most important component, most significant component? That will be the interest income. Interest income will be the most significant component on all of these loans advances, because this is the key activity for the NBFC. This is the principal revenue generating activity, or in simple terms, you can say this is the revenue of the NBFC. Correct? Now, for this revenue recognition, for this income recognition, we understand that there are certain impacts which may arise on this income recognition depending on the classification of the NBFC. Yeah, correct? Because if it's an NPA, we cannot recognize income on accrual basis. Yeah, so there is a correlation between these two. And the other part is around this provision. If there is a provision, this will also be impacting the P&L during the year. Whether it's a reversal of provision in certain cases or whether it is about creation of provision during the year. Now, these are, I would say, the most important objectives of an auditor while looking at the balance sheet and P&L of an NBFC. Now, for this to be verified, what are the set of documents which the auditor will ask for? First, of course, will be the agreement with the third parties, with the customers, because that agreement will give us an understanding as to whether the customer is regular in making the payments or not, depending on which the classification will change. And these days, all the financial institutions, because they deal with voluminous data, are quite IT savvy. All of these data management, all of these information capturing, all of these assessment by the NBFC is not possible to be carried out in a manual manner. These days, all of these financial institutions use ERPs, basis which they are able to capture the reports for the classification, for the provisioning, for the computation of interest income, for the computation of provision during the year. Yeah, so as an auditor, therefore, what is important? Therefore, it is very, very important for the auditor to understand about the generation of those reports, about the assessment of whether the reports which are getting generated are correct or not. Yeah, clear? That is the first thing. So definitely, auditor would want access to all of these reports. And all of these reports would then be backed by the underlying documents. And the underlying documents in this case will be the agreements, which we just discussed. And the underlying documents would also be the regulatory requirements, which may keep changing and which the auditor should be aware of, and which should also be getting updated in a timely manner in the systems, in the processes of the organization. For example, if there was a provisioning criteria of say 0.4 for standard asset, let's suppose during the year from 1st of July, this has changed to some other percentage. Are those, or are the reports still getting generated using the same percentage which was applicable up to 30th of June? So these are some of the assessments which are required to be carried out. And how is this possible? Auditor will have to get into the computations of all of these items. Interest income, the computation of interest income. There are reports of interest income which will be available to the auditor, which will then be required to be verified by the auditor in a test check manner, and applying the analytical procedures on the interest income. So this mixed set of audit procedures will have to be applied by the auditor, basis which he will be able to come to a conclusion around some of these aspects that we just talked about. Clear? Clear on this? Now, I'll get on to some more set of audit procedures which is available in the form of checklist. Let's discuss that. Physically verifying all the shares and securities held by NBFC. Where any security is lodged with an institution or bank, certificate from bank institution to that effect must be verified. Why? Because these are all assets of the NBFC. So if these assets are lodged anywhere, of course, there has to be an acknowledgement for the same, that yes, these assets have been kept at some place or these have been lodged at some other place. Verify whether the NBFC has not advanced any loans against security of its own shares. Why? Because that is not permissible. If they will give the loans against the security of its own shares, that will be a non-compliance. Verify that the dividend income, wherever it is declared by the company, has been duly received by NBFC, and interest, wherever due, has been duly accounted for, except in case of NPS. Why? Because in case of NPA, interest income will be accounted for on cash basis. Okay, that is on cash basis. So these aspects are required to be verified. Now, how will that be verified by the auditor? Auditor will have to do this categorization. So whenever the interest income will be reviewed by the auditor, auditor will have to check the interest income which is for the performing assets and the interest income which is for the non-performing assets. And please remember that this exercise is not so simple. It may happen that some of the performing assets may have changed to non-performing during the year, and some of the non-performing assets may have become performing during the year. Yeah, so this changeover during the year and the timing at which this changeover would have taken place is also required to be audited by the auditor. Auditor needs to be very, very careful, because many a times errors are made on the cutoff date. So say for example, an asset which was performing asset should have been classified as non-performing from 15th of July. But let's suppose management continued to keep it as performing up to 31st of July. So they considered full month. Yeah. So these are some of the errors which would generally be made by the management. And this is something which the auditor should be aware of. Test check bills, contract notes which are received from the brokers with reference to the prices vis-a-vis stock market quotations on the respective dates. Verify the board minutes for purchase and sale of investments. Ascertain from the board resolution or obtain a management certificate to the fact that investments which are acquired are current or long. Yeah, so this is about the investments of the NBFC in terms of their assessment, whether it is current or long term. Obtain a list of subsidiary or group companies from the management and verify that the investments made in the subsidiary or the group companies during the year is in line with the approved principles. Ascertain the basis for arriving at the price paid for acquisition of such shares. Now, therein, whenever you get into such type of audit procedure of investments which are made, one document which will always help the auditor will be the board minutes. Because whenever any acquisitions are made, any significant investments are made, generally a discussion on the same will be done in the board meetings. Yeah. So that's why that is one of the documents which will help the auditor. An auditor will have to ascertain whether the requirements of AS13 is the standard which deals with the requirements of investment, whether those have been duly complied with. Verify that the securities of same type or class are received back by the lender, paid by the borrower, at the end of the specified period together with all corporate benefits thereof. Obtain a confirmation from approved intermediary regarding the securities which are deposited. Verify charges received or paid in respect of securities lent or borrowed. Obtain balance confirmation from the concerned parties in respect of any advances which are given, any loans which are given, or any outstanding amounts which are there. Now, this set of audit procedure is particularly in reference to the loans advances. And this is one of the most important set of audit procedure. This is very, very important because this is a external confirmation, and any evidence which is external is considered to be more reliable. So that's why whenever we have to get into the underlying documents, you remember the underlying documents in respect of advances. So the external evidence is always considered to be most appropriate, and that is possible by obtaining the balance confirmation from the third parties. And definitely there are a lot of internal documents. For example, if there is any sanction document, the various terms which are there on the agreement, the security which could have been there with the management, the underlying documents in respect of those securities, these are all required to be carefully assessed, reviewed by the auditor. Check whether the NBFC has not lent, invested in excess of specified limits to any single borrower as per NBFC prudential norms. Check the classification of loans. Yeah, something we have already discussed. Now, these are only, I would say, limited audit procedures. I won't say that this is an exhaustive set of audit procedure which will apply to any NBFC. The idea was to just give you an insight as to what could be the audit procedure which are peculiar to only an NBFC, which you will not find in case of any other company. Correct? Yeah. And every time whenever we have to think through about an audit procedure, what is the most important thing we need to do? We need to understand the transaction. We need to understand the business. The moment we understand the business, the moment we understand the transaction, automatically the next question that will come to our mind is as to how this has been done. How this has been done by the management is something which the auditor will have to check, and that will help us to draft an audit procedure from the same. All right, clear on this? So with this, I think we can conclude our discussion for today because some part of this chapter is still left, and I would say an important part of this chapter is still left, which we plan to continue in our next session. As of now, for the time being, I think we have largely talked about the compliances related to the NBFC and the provisioning requirements, which are very important for an auditor and which is also a peculiar requirement of the NBFC. Any questions, any doubts that you may have, you may just feel free to share and we can have a discussion around that in the next session. So thanks to all of you for your time and for your wonderful participation. Thanks so much.
Nisarg ji.